Hello and welcome back to Bhavani JIB. Today we are talking about retail banking, specially made for Indian bank employees aiming to crack JIB. In our journey through paper 4, module B, we start with the 14th unit, recovery of retail loans. Here we will be learning about the type of defaults, classification of irregular loan accounts, the SARFAESI Act, DRT, and the Lok Adalat. Banks aggressively build up the retail asset portfolios to expand business as retail assets are one of the best revenue providers in banking. The unsecured nature of retail assets, like personal loans and credit cards, are vulnerable for default as there is nothing to proceed legally. Then, what is moratorium? It is the time allowed for borrowers where they are not required to pay any principal repayment. It is like a waiting period before the EMI begins. There are three types of installments. The first one is the bullet repayment, where the loan amount with interest is paid in a single payment at the end of the loan period. Next is the fixed installment loan, where the borrower has to pay the loan installments along with the entire interest accrued in the account during that period. The last one is the EMI, the equated monthly installments, which we all know. The EMI consists of two components, namely the principal and the interest. The principal component will be less during the initial months, and the interest component will be more as the repayment progresses. The principal component will increase and the interest component will reduce. We will be learning more about the EMI calculation in the accounting chapters. But here, we will just know the formula. EMI is equal to P into R into 1 plus R to the power of N by 1 plus R to the power of N minus 1, where P will be the principal amount, that is the loan amount, R is the rate of interest, and N will be the tenure, that is the period. We will be calculating this EMI, and this EMI will be advised to the customer before disbursing the loan. What is default? Default is the occurrence of an event which happens due to non-repayment of agreed installments. The severity of default varies according to the period of default, from a simple overdue to a stage of NPA. There are two types of defaulters. First one are the genuine defaulters, and the second are the willful defaulters. Genuine defaults happen due to the reasons beyond the borrower's control, like job losses, unforeseen medical expenses, etc. The intention to pay is intact, but he or she is unable to pay. But in case of willful defaulters, the borrowers deliberately do not want to pay. When it comes to willful defaulters, we need to keep in mind 2 points. First is the diversion of funds, where the funds are being diverted for the purposes or activities other than those for which the loan was sanctioned. The second is the siphoning of funds, in which the funds borrowed from banks are utilized for purposes unrelated to the operation of the borrower. Most banks try to elongate the repayment period so that the customers are not under extra pressure to service the loan, and this phenomenon is called as the rescheduling of retail loans. Rescheduling happens in two ways. One is to pay higher EMI and the tenure of the period of the loan remains the same. Or you pay the reduced EMI wherein the tenure or the period of the loan extends or elongates. This is about default and rescheduling of loans. Classification of irregular loan accounts. A retail asset becomes non-performing when it stops to generate income for the bank. A non-performing asset, that is NPA, is a loan or an advance where interest or installment of principal remains overdue for a period more than 90 days. NPA accounts are classified into substandard, doubtful, and loss. Substandard assets are the assets which have remained NPA for a period less than or equal to 12 months. Doubtful assets have remained in the substandard category for a period of 12 months. Loss asset is considered uncollectible and of very little value, that its continuance as bankable asset is not warranted, which means this loss asset is not considered as an asset to the bank anymore. Under doubtful assets, we have doubtful 1, 2, 3, wherein doubtful 1 is an asset which has remained in doubtful up to 12 months of period, and doubtful 2 is where the asset has remained doubtful more than 12 months but less than 3 years. And doubtful 3 category is where the asset has remained doubtful for more than 3 years. So this is about the classification of irregular loan accounts. Next is the provisioning norms. As per banking norms, provisions should be made on the non-performing assets on the basis of classification of assets. The table here will show us what is a provisioning to be made for the type of asset. This standard classification question was asked in one of the question papers. So please go through these standard asset provisions, that is agriculture and SME for commercial real estate, residential, housing sector, and for housing loan. You have to basically by heart this. Next, for the substandard secured loan up to 1 year, it will be 15%. Substandard unsecured loan, it will be up to 1 year, 25%, and 20% for infrastructure loan. Doubtful one, second year will be 25% secured and 100% unsecured, and so on. See, there are questions and calculations on these provisioning norms in CAIIB. But for JAIB, if we can just by heart these figures, it is more than enough. Just need to know the percentages. So this is about the provisioning norms. Next is the SARFAESI Act. Those people who are working in advances might have heard of this act. Okay, SARFAESI means Securitization and Reconstruction of Financial Assets and Enforcement of Security Interest Act, which was passed in 2002. Clearly, this question will not be asked as in what is SARFAESI, the full form of SARFAESI. So we might have to learn something more about SARFAESI, which will be asked in the exam. With an aim to provide a structured platform to the banking sector for managing its NPA and to keep pace with the international financial institutions, to allow the banks and the financial institutions to take possession of security and sell them. SARFAESI came into picture for this. We can have a look at the table, the process which needs to be followed under SARFAESI. Usually the borrower gives or mortgages, you can say, his property, which could be movable or immovable, as security and takes the financial assistance from the bank or any financial institution. But when the borrower doesn't pay, the loan becomes NPA. In that case, the bank transfers the secured assets to the asset reconstruction company, where the asset reconstruction company gives the security receipts to a qualified buyer, which means the security which was lying with the bank will be sold in an auction to the qualified buyer, and then the cash is taken from the buyer and given to the bank. So this is roughly how a SARFAESI Act works. SARFAESI Act can be initiated only if the loan account satisfies some of the conditions. The first one is the outstanding dues should be 20% or above. Secured assets should not be an agricultural land. Documents should be enforceable and unexpired. It should ensure that the lenders have a minimum of 60% of dues outstanding. There are some more points that we need to look in SARFAESI. An authorized officer, also called as a AO, will take the possession of the mortgage immovable property in the following manner. The person has to first give a demand notice and then a possession notice has to be issued. The possession notice has to be stuck outside the door of the property, and within 7 days of taking possession, notice has to be published in two leading newspapers, one of which should be a vernacular language. That is, suppose if it is Karnataka, it has to be in Kannada, and if it is Tamil Nadu, it has to be in Tamil, and so on. Physical possession has to be taken within 30 days from the date of application. Auction has to be done in the form of electronic auction. The AO will fix the reserve price at 90% of the fair market value, and 30 days sale notice will be given and a public auction will be made. If the book outstanding at the time of auction is less than 5 lakhs, then e-auction need not be made. But then a normal action can be made. Okay. So this is about the SARFAESI Act. And very closely related to the SARFAESI Act is the DRT. DRT is somewhat like a court. DRT is the Debt Recovery Tribunal and the Debt Recovery Appellate Tribunals. They are the apex bodies to settle recovery issues in case of loans. This is usually presided over by a presiding officer and one or more recovery officers. You cannot approach the DRT if the debt is less than 20 lakhs. So keep in mind that if you have to approach the DRT, the amount of debt has to be more than 20 lakhs. And there is a fee that you need to pay to the DRT. For 20 lakhs, it is 12,000, and more than 20 lakhs, it will be 12,000 plus 1,000 for every 1 lakh up to 1.5 lakhs. So this will be the fees. The DRT gives an opportunity to both the sides, that is the bank and the borrower, to put their points in front of the presiding officer. The modes of recovery under DRT will be the possession of property like SARFAESI and the arrest of the defendant and also the detention in the prison. So this is how the DRT works. So if a person, the borrower, has an issue with the DRT's decision, he can put his appeal before the Debt Recovery Tribunal, Appellate Tribunal. So he can go to the next court. It is like if your case is not, if you're not really satisfied in the High Court, you go to the Supreme Court. So it is something like that. Okay. So this is about the DRT. Next is the Lok Adalats, which you might have heard in the bank. So recovery through Lok Adalat is the easiest, cheapest, and the fastest mode. One-time settlements can be made. It can be put through Lok Adalat so that in case of default in payment as per OTS, it can be executed by the court. Under the provisions of the Legal Services Authorities Act 1987, the Act extends to the whole of India except for the states of Jammu and Kashmir. And this Lok Adalat is presided by a retired judicial officer. There are different steps to be followed for recovery of debts by the branch manager. The settlement may be made under the following terms. The down payment or the full payment can be made within short time, or full payment can be done in installments within short time. And this is about the Lok Adalat. Next is engaging of direct recovery agents. When we think about recovery of retail loans, the first thing which flashes in our mind is the recovery agents. These recovery agents are deployed by the banks. The methods adopted by these recovery agents exceeded the normal recovery routes and went to the extent of threats and intimidation and forced to recovery. And to avoid this, the RBI has set up some guidelines to the debt recovery agents, that is DRAs. Banks should have due diligence process in engagement of recovery agents. They need to ensure notice and appropriate authorization and inform the borrower the details of the recovery agency. The details of the agency or the firm or the company has to be posted in the bank's website. Before giving the case to the recovery agents have to be properly trained. 50 hours to the graduates and 100 hours for the non-graduates, and they have to pass a DRA exam conducted by the IIBF, the Indian Institute of Banking and Finance. And there's one more point, that a case has to be given to the recovery agents only after resolving any grievance filed by the borrower. So if there is any grievance or complaint which has been uh, filed by a borrower, first that has to be addressed, and then you have to give the case to the recovery agents. So this is about the recovery agents. So far we have learned about the types of defaults. First we learned about the moratorium and then the types of defaults, and then the classification of irregular loans and the provisioning of irregular loans, the SARFAESI Act, the DRTs, Lok Adalats, and then the recovery agents. Don't forget to subscribe for more insights into the world of banking. Stay tuned, stay informed, and keep banking the Bhavani JAIIB way. Thank you. And next up, we will be learning the next unit, that is the Management Information Systems, that is the MIS. Until next time, happy banking.